Okay, we're good to go.
Good to go.
All right.
Go.
Okay, thanks guys. So yeah, happy to be here with you all again. I think I recognize everyone here. Do we need to do introductions, or does everyone know us at this point? Anyone who doesn't know us here? I'm just going to go ahead.
Yeah, we have the same crew that we've had the last few weeks.
Okay, perfect. All right. So I went through a few different names when I was putting this presentation together because, at one point I was calling it invoicing, and at one point I was calling it salary something else. But the message we got was that you were looking for some kind of concrete information on what to look for when you're paying out on salaries that have been requested from you from your subgrantees. So that is what we are going to be talking about. And so we're going to start off with kind of the same convention we've done before. Just ask you if there's anything specific that you hope to learn today about reimbursements for salaries and benefits. If there's something specific on your mind, go ahead and drop that in the chat because we will be monitoring that. And we'll have some time for questions at the end as well. So feel free to drop that in the chat. These are our learning objectives. So today we want to talk about how salaries and benefits are eligible. So what makes them eligible, and then how are they documented according to both the ESG program interim rule and the uniform guidance, which is, we'll talk about what that is. That's basically 2 CFR 200. And then we're going to talk about understanding what documentation ESG subrecipients must maintain to support project costs for salaries and benefits. And then we'll review the ESG recipients, so HCD's role in evaluating documentation related to benefits. So what should you be looking at? When should you be looking at it, et cetera? And this is the order we'll go in. We'll look at the regulations and guidance first, then we'll talk about the recipient, so HCD's requirements. We'll talk through subrecipient requirements, and then we'll talk through the reimbursement process and how it all applies. And just want to point out that as we go through this, we're talking about compliance, right? We're talking about how all of these things feed into being a compliant ESG program. There are layers to that. So there is the federal cost principles, which is contained in the uniform guidance, and that's kind of your top layer. That covers most federal programs. There's a few exceptions, but it covers the vast majority of them. And then you've got the ESG interim rule. So the ESG interim rule basically tells you follow the uniform guidance unless this rule says otherwise. In that case, the ESG interim rule takes precedence, and it does provide a little bit of variation to what's in the cost principles, but it tells you specifically in the interim rule what that variation is. And then below that, you've got HUD guidance. So what I'm thinking of here is documents released by HUD, FAQs released by HUD, and if you have gotten any AAQ guidance, so ask a question guidance from HUD specific to your program, that also applies. And then you've got your local policies. And so that's kind of the bottom layer. So once you've gone through all that other stuff, you can establish local policies. And as long as those are in line with all of the things I just talked about, and could potentially be even a little more stringent in some cases, if that's what's best for your program. So that's kind of your final layer, but all of that leads to compliance for your ESG program. And I'm going to turn it over to Gordon to get us started off talking about the uniform guidance.
Thank you, Mike. If I could have you pop back one slide for just 1 second, I want to deviate and highlight something that I think you captured really well here. So we every single week hammer on 2 things, which is that you need to have things in writing, and that there are layers to ESG compliance, no matter what we're talking about. And when I saw the slide, I was really stunned that we are so far into this process and we hadn't put together something that looked like this for you before. This slide could be adapted to literally every single presentation that we have given and will give, because whatever we're talking about in ESG is ultimately pulling from roughly 4 different pools of things: general federal guidance, specific ESG guidance in the interim rule, specific HUD guidance that proceeds from the interim rule, and your local documents, which exist at the recipient level, at the subrecipient level, and in your contracts. And so going forward, whenever we're talking about the many valences or layers of compliance, of rulemaking and the interactions of those. Just think back to this slide, and I'll try and dredge this up as much as I can. But I really feel like this slide captures elegantly exactly what we're talking about when we talk about ESG. So like major kudos to Mike on this, because I was really blown away when I saw it. Back on our regular schedule, if you want to pop us ahead a couple of times. So we're going to talk a little bit about the uniform guidance, or 2 CFR 200. Next slide, please. So 2 CFR 200 is the uniform administrative requirements, cost principles, and audit requirements for federal awards. Tuesday is exactly right, the circle of HUD. The 2 CFR 200 is cross-cutting. It applies to ESG, it applies to other programs. Not all of 2 CFR 200 apply to ESG. Not all of the parts that apply to ESG will apply to every recipient, but ESG draws significantly on elements of 2 CFR 200. It's one of the 2 major regulatory bodies that ESG touches. 2 CFR 200, which is the uniform principles, and 24 CFR 576, which is the ESG program interim rule. The cost principles in 2 CFR 200, among many other things, describe the methods for allocating salaries and benefits in federal awards, including ESG and the documentation standards for those expenses. And you can see in there, there are subsections that address those specifically. And there's a note at the bottom about OMB grants management circulars. This is a lot like what happened actually with the Emergency Solutions Grant, but also the Continuum of Care program, in that for a long time, there were these OMB, or Office of Management and Budget, I want to say, OMB circulars that were floating around that nibbled at pieces of what eventually became the uniform guidance. Those circulars are still floating around, but all of them have been superseded by the uniform guidance. You will still see references to those OMB circulars in all sorts of strange places, including subrecipient documents, in the same way that you might bump into a subrecipient document that references the SHP program, for example. But at the end of the day, the uniform guidance is the central guidance hub. Mike, looks like you want to hop in there.
And just because I have it in my notes here that you probably can't see, so we're talking specifically about circulars A21, A87, A110, and A122. So references to those are antiquated.
Yep, and easy to remember. Next slide, please. All right, cost principles for compensation. Salaries and wages have to be supported by records that reflect actual work performed. They need to be supported by a system of internal controls to ensure that costs are accurate, that they're allowable, and that they are properly allocated to the right budget line within ESG. They need to be incorporated into the official records of the organization, so they need to be on the organization's books. They need to reasonably reflect the total activity for which the employee is compensated with federal funds. So broadly speaking, positions have a percentage of their FTE that is allocated to federal funds. This needs broadly to reflect that. And finally, it needs to encompass all federally assisted and then all other activities that are compensated for by the agency. And that they can incorporate subsidiary records based on the agency's written policy. Generally speaking, what that means is salaries and wages have to have records that accurately describe everything an employee is up to. Mike, you look like you're popping on again.
Sorry, one more thing, just another thing I have in my notes, because I think this was a specific item. Just to note, we're going to talk a little more about this later, but I do want to point out that supporting documents for salaries have to have an identifying thing that ties them together, and that typically is an employee's name. The PII requirements do not apply to employee names in this context the same way that they apply to client records for HMIS or client records for reimbursement and that sort of thing. So just pointing that out.
Yep, absolutely. Thank you. I have also seen employee ID numbers from very sort of information conscious or very large agencies, but usually it's names. Cool. Records must also comply with the established accounting principles and the established accounting policies and practices of the agency. So you can't have strange and different policies for ESG alone. They need to support the distribution of the employee's activities or cost objectives if the employee works on more than one project or cost activity. What that means is if the employee in question is working on more than one ESG project, it needs to sort expenses out by project type, not just say, nah, it's ESG, we'll pay for it with ESG. And finally, budget estimates that are determined before the services are not a qualifying piece of backup documentation for charges. They can be used for interim accounting purposes. We'll get to that in a moment. But what this means is that if you make a budget estimate ahead of time, you can't then you can't then submit that as documentation for an expense reimbursement. You need an actual expense to tie it out to. Next slide, please.
Okay, and I think this next one is me.
Over to you.
Thank you, Gordon. And I selfishly kept this one for myself because I have been deep in this rabbit hole before. But budget estimates. So when we talk about that, we're talking about we're talking about using an estimate to show the amount of time allocated to different projects. So like in the simplest example, you might have an employee that generally works, say 50% on one project, 50% on another. You can use a budget estimate for your interim accounting purposes. That's an important deviation from those previous OMB circulars for nonprofits specifically, because in the circulars, nonprofits were required to charge time allocated to each project in real time. Under the uniform guidance, they were brought into the same standards that used to only apply to state and local governments, where they can use budget estimates. But it is important to note that the budget estimate is only temporary. So they can use budget estimates for those accounting purposes if the system for establishing the estimates produces reasonable approximations of the activity actually performed. So it has to be reasonable. The system must account for significant changes in the corresponding work activity. So you have to be able to identify those and enter them into the records in a timely manner. So within 1 to 2 months. What we are basically saying here, without me reading it word for word, is that if you're using a budget estimate and the person's proportions are fluctuating, that needs to be recognized in the records, and that estimate needs to be updated within 1 to 2 months. The system of internal controls includes processes to review after the fact interim charges based on budget estimates and making those adjustments. So again, what we're saying, you have to have a documented process if you use budget estimates showing how you are going to go back, review timesheets, make sure that those estimates are accurate, and make adjustments if the estimates turned out to not be accurate. So at the end of the day, you do have to charge based on time actually worked. Again, just emphasizing, budget estimates are only for interim accounting purposes. And so cost principles for fringe benefits. These are the fringe benefits that are specifically mentioned in the uniform guidance. So we're talking about leave, Social Security, various employee insurance programs, pension plan, unemployment. And then there, they give you this general category too. So there are other things that would qualify as benefits if they're required by law, by an employment agreement, or by your agency's policy. So if there's something that your agency provides as a benefit to employees, then that's typically going to qualify here if it is based on your agency's written policy to provide that. And so benefits must be allocated in a way that is consistent with the pattern of benefits attributable to the individuals or groups of employees who have salaries and wages, or whose salaries and wages are chargeable to federal awards, and they must be charged as direct or indirect costs in accordance with your accounting practices. What we are saying basically here is that you should charge your benefits in the same way that you charge salaries. So if you're breaking your salary out proportionally for an employee and allocating it to different programs, then for the particular pay period where you break that out, you would break out the benefits associated with their pay in that pay period the same way. That's basically what we're saying. And I'm going to turn it back over to Gordon to start us off on the ESG program interim rule.
Okay, let's do it. Next slide. All right. So this is my favorite slide, so I'm glad that I got a piece of this one. The word salary and salaries are sparse in the ESG interim rule. They exist in the HMIS component and in the administrative costs section, and otherwise just don't appear. Salaries are eligible under multiple activity types and components and under admin. Some of the more common activities associated with salaries include participant engagement, case management, and HMIS, though also under admin, we're talking the costs necessary for executing and planning an ESG grant, like budgeting, monitoring, reporting, and salaries, like other costs, are billed directly to the line item of the activity with which they are associated. And so the thing I would highlight while we're sitting here is that if you were to go into the ESG interim rule and look for where salaries exist in rapid rehousing, you wouldn't find it. And you would instead find activities that clearly require a human being to do them. And that's where you would infer the presence of salary reimbursement. So I too have got caught on that particular one before. Next slide, please. Benefits associated with salaries are not explicitly outlined in the ESG interim rule. Same thing as with salaries. The costs associated with salaries are generally charged in the exact same way as salaries are charged. So again, if you're charging salaries in a certain way, you're going to charge benefits in a way that is consonant with those charges. If salaries are eligible for a certain thing, benefits are eligible under that same principle. And when specific guidance is absent in the program regs, so if you can't find it in the ESG interim rule, ultimately you should refer back to the uniform guidance into CFR 200. Next slide, please. Thank you. So what's HUD have to say? Next slide. And I'm going to see in the chat box, or if somebody's brave enough to come off mute to answer this one. So HUD FAQ 1838 asks, are employee compensation, or is employee compensation, including fringe benefits such as holidays, vacation, and sick leave, and other overhead costs, eligible expenses under the ESG program? And how should they be allocated? Does anybody want to take a stab? I know it's the overview session. We don't usually ask people to hop in. I'm curious if anybody wants to take a try at it. Mike's like, yeah, I'll take a try.
I was just gonna say we are not seeing anyone take.
All right, let's go. Let's see what the answer is. All right, employee compensation and other overhead costs that are directly related to carrying out activities eligible under ESG are eligible costs under the relevant component. I'm going to say that again because this is critically important, and not having your arms around this one will cause trips. Employee compensation, so salary, fringe, and other overhead costs that are directly related to carrying out activities, and other overhead costs, desks, office space, the things that you would need to make the program go, that are directly related to carrying out activities that are eligible under ESG. And so directly means that you can tie it back to a specific activity or specific activities within a given ESG component, are eligible under that component. So what that means is employee compensation, so salary, fringe, and overhead necessary to carrying out, for example, emergency shelter, would be eligible under emergency shelter. They wouldn't be eligible under admin, and they wouldn't be eligible under another program component, but they would be eligible under emergency shelter, but they have to be directly related to an activity. And so if you can tie it back to, for example, the case management line of emergency shelter, which is broad in scope and refers to planning, executing, referring, doing everything that you need to interface with clients and get them to a place where they're achieving stable, self-sufficient, permanent housing. If you can tie it to that, then it's eligible, but it needs to be tied to that. It can't be, and this is the big red blinking light that I want to highlight, it can't be agency overhead that is disconnected from the project. So for example, if it is your executive director is fundraising, and those funds might in some way be related at some point to ESG. Those fundraising costs are not overhead that is directly related to an ESG component and would not be eligible under the ESG program. And I'm highlighting this because, and you know that I like to draw on stories. There was a subrecipient, and I won't say for what program, and I won't say where, that I worked with for several years, that had an executive director whose entire salary was being charged to I shouldn't say which program, but this is tied to the admin for a certain HUD program. The executive director was earning well over $100,000 a year. All of it was charged to a certain program's administrative costs. It was done for several years, and it absolutely was not correct, even a little bit, because the executive director in question was not really involved in project delivery. So thank you for letting me go off on that tangent, but it is unfortunately common and a really good red flag to keep an eye on, that agencies are not using ESG as a slush fund, for example. In addition to which, determining how those staff costs should be allocated will ultimately depend on the type of assistance being provided to the program participant. What that means is ultimately you got to make sure that whatever you're giving to a program participant ties out to the component in question, which ties out to ESG as a whole. Next slide, please. So allocating costs, first you have to determine the program component under which costs fall. So like I said, it's ESG eligible, great. What component are we talking about? Is it rapid? Is it HMIS? Is it admin? Then you have to allocate the costs to an activity within the component. So we've determined that it's emergency shelter. Great. What activity within emergency shelter is it covered by? Is it operating costs? Is it case management, et cetera? So there's an example down there. Staff time expended on processing checks for utility payments could in theory be eligible under rapid or under homelessness prevention. The activity is housing relocation and stabilization, which is an eligible activity within both of those program components. The question is, is the participant at risk of homelessness or experiencing literal homelessness? Which project are they enrolled in? What are you serving them under? Is the question. And for salaries and related costs of staff that aren't fully dedicated to a specific component, costs need to be reimbursed in proportion to the actual hours worked on each ESG component. Staff, and finally, staff positions that are not fully dedicated to ESG cannot be paid solely through ESG funds, meaning ultimately if you're 75% ESG, 25% doing something else for your agency, the recipient should not be expecting to get bills month after month for 100% of that staff person's time. Next slide, please.
Okay, I think the next section is me.
Yep, over to you.
Yeah, so we're going to talk about the recipient requirements. So recipients, and when we say recipient here in this context, we're saying HCD, must determine the exact methodology for tracking time related to the ESG program. What that means, that's a tie back to policies and procedures, as we keep saying. If there is a specific standard for timekeeping that you want to see from your subrecipients, then you need to determine that and have a policy around it. So that flows into our next point here: maintain policies that define time tracking expectations for subrecipients. If you're going to expect a certain thing of them, then that needs to be documented. Maintain policies regarding reimbursements. That means maintaining policies around what you want to see and how often you want to see it for the reimbursement process. So if you want to see timesheets every time, that should be in a policy. If you want to see paycheck stubs every time, that should be in a policy. And then monitoring for compliance. So that's, we know that you're just getting into monitoring, and, when you do monitoring around stuff like this, it can be broken up. Some of it can be part of the reimbursement process. Some of it can be part of a more comprehensive monitoring cycle. So that's really up to you to determine. So determining the timekeeping methodology. In the answer to the FAQ that Gordon just talked about, HUD recognizes explicitly that the simplest method for tracking time is a timesheet. I think many organizations have tried many things to track time, but HUD has formally said in that document, they think that timesheets are the easiest way to do it. Timesheets can be on a standardized form or on a form developed at the agency level, or they can be produced from an electronic timekeeping system. So what I'm saying here is timesheets can look different. You could have a timesheet you wanted all of your subrecipients to use, but I think you have to recognize, if you want to require that, that can affect other programs if they have multiple funding sources, and it creates one more thing for them to do administratively. They have to maintain multiple timesheets. So it's something to consider, but you could have a standardized form. You could let them develop their own form and just have them, follow specific guidelines with what it should contain. Or if they keep time electronically, that is what we do here at ICF. That is acceptable as well. They can have a timekeeping system where the time is allocated based on entries into an electronic system designed for that, and then it produces reports that would show you what a manual timesheet would show you. Regardless of the format, timesheets must contain a breakout by project. They must contain a date, so the dates of the work, and a date of approval. It must have an employee signature. If it's an electronic system, that signature might not be, an ink signature. It could be an electronic stamp of some sort, but it must have an employee verification. And then it must have a signature or verification from a supervisor or another authority figure who is, basically signing off saying, I agree with what the employee has signed off on here. Looks like you came off there, Martin. Go ahead.
Yeah, I can pop in for just a sec. On the subject of requiring a standardized timesheet across your subrecipients, I would gently suggest that if you were inclined to do that, that you only do so after consulting with every single subrecipient and getting their, if not enthusiastic consent, at least their agreement that they are willing to do it. If you require it, you can require it. But every agency handles timekeeping differently, and it's very likely to cause havoc, especially to agencies that have like a system that they've bought into to say, hey, we want you to do this differently. At minimum, it's going to require a change in their workflow, and it could have repercussive effects, like Mike said, across different programs. So go carefully there would be my advice.
I agree with that. And another important thing to keep in mind too, and I'm going to mention this again from earlier, so having names on things, you have to be able to tie the timesheet to the payroll record to the accounting record. And the name is typically the easiest way to do that. If you use a code of some sort, then there is going to need to be a cipher for that is maintained somehow. So if you don't want names and you want to use codes of some sort, just keep in mind you'll be responsible for having to maintain some sort of cipher so you can tie it all back. Because if HUD comes to monitor and they see all of these documents tied together with a random number, the question is going to be, that's great, it all ties together, but who did this payment go to? What position, what work were they doing on the program? So you have to ultimately be able to trace it back to who was actually paid. So I'm just reiterating that for emphasis here. So HCD as the recipient also must maintain these types of policies. So policies must cover all expectations for how subgrantees track time. So that includes the use of any specific tools. We just kind of went through that. I agree with Gordon. I would suggest considering very carefully if a specific timesheet is what you want. Policies may be maintained in a manual and referenced in subrecipient contracts. That is what you see as usually the easiest way for doing that. Policies for reimbursement must outline what documents are expected with each reimbursement request submitted to HCD. So we talked about that a little before too. If you're going to request specific things from your subrecipients, your policies need to reflect that. Policies for reimbursement must establish circumstances under which reimbursement may be denied. What we're saying here is if there are specific things you want to see, and you are spot checking those specific things for compliance, then your policies need to spell out, if we don't see these things, or if these documents don't tie together, if the costs don't appear to be reasonable, that sort of thing, then we might deny the reimbursement. And you can word it differently. It doesn't necessarily have to be, we will deny. It can be, we will request more information. We will dig in more, that kind of thing. But you should make it clear that there are situations in which reimbursement might not immediately happen if the documentation that you've requested doesn't appear correct. And then under monitoring for compliance, so you have to request detailed documentation upfront with reimbursement requests, or I'm sorry, you can request detailed documentation upfront with reimbursement requests, or you can review the detailed documentation during monitoring, or you can do some combination of that. So you don't necessarily have to request every salary document for every position every time when you get reimbursements. You can. But you can split it up. You can do some of it during reimbursement and some during monitoring if you choose. During monitoring, whether it's spot checking or a more intense monitoring visit, salary expenses from reimbursement should always be sampled and examined for compliance. So what I'm thinking of is when I used to do monitoring for ESG, we would pull, we would go through the last year's worth of reimbursements and we would randomly select some of them. And then we would go in and we would randomly select things that we were going to sample when we were on site. And we would always pick some salary expenses to sample because that's one of the most common things that agencies get wrong, honestly. If sampled expenses are not supported by proper documentation, that warrants a more in-depth review of their records. So if you do what I just said, if you sample some random salary costs, and then you go to the agency and the timesheet doesn't line up with the accounting records for the one you're looking at, it probably doesn't line up for a lot of others. And that warrants a deeper dive to figure out how you can help this agency come back into compliance. And it also helps you figure out if there's anything that you need to do in terms of remediation. So this is within the context of the HCD ESG program, but this is kind of what the compliance process looks like. So you've got your policies, the HCD policies, which have to be compliant with all of the stuff we talked about earlier. So I'm kind of getting down to the local level here. You've got the HCD policies, and those feed into subrecipient policies. All of that determines what the documentation is going to look like for things like salaries. That leads into reimbursement. I get the feeling you're probably going to want to look at some documentation as part of reimbursement until you get more entrenched in your ongoing monitoring process. And so that leads right though from reimbursement into monitoring. And it's just this circle that keeps going. But that is what the process looks like. And so here are some key questions for you to be thinking about. Do you want to develop standardized documents for subrecipients around any of this? You may or may not. I, again, agreeing with Gordon, think that with a program as large as yours, it might be more beneficial to just develop some standards around the documents. Here's what we want to see on the documents, but then let the subrecipients kind of handle the bigger part of that workload developing it, but it's up to you. When do you want to collect backup documentation? Do you want to look at it during reimbursements, or do you want to push the bulk of it to monitoring, or do some combination? And that can change over time as well. But how do you want that to look? How do you want to collect backup documentation? Do you want them to send it to you electronically? Are they emailing it? Is there a repository for it? Are you asking them to drop it in the mail? I have seen that before too. It's not a pretty process, but I have seen it. And then what level of verification will be delegated to subrecipients regarding their own subrecipients. So, we know that your ESG funding usually goes to a locality and then that gets subgranted out to their local providers. So what we're saying here is, out of all the stuff we just talked about, how much of that do you want to push down to that first level subrecipient to enforce? So those are just some key things to think about as we're going through this and as you're figuring out how you want to handle these things. And I'm going to turn it back over to Gordon.
All right, thank you. And as I just dropped in the chat, I want to pick on what Mike just said and just re-emphasize how valuable I've found it in many different communities to have standardized forms for reimbursement requests, especially things like cover sheets and invoice registers. It makes it so much easier just to review, to know what forms you're getting and to just burn through them, bing, bang, boom, like that. So something to think about. Subrecipient requirements. I think we've used every stock image of files in Microsoft Office today. Subrecipients and subs are required to abide by all federal and state requirements, maintain proper documentation to demonstrate their compliance, and submit documentation as required by, for example, HCD for reimbursement, monitoring, and reporting. Note that they can also be required to submit most, if not all of that, by HUD and other entities like the legislative auditor. So next page. Components of documentation. We've gone over this. This goes back to something I think we said last week about match, that expenses really have kind of 3 to 4 components in each of them. They've got the thing itself, they've got a record that the expense occurred, they've got a record that money went out the door, and then they've got subsidiary documentation that the expense was eligible. When we talk about salary and benefits, what we're really talking about are payroll records, accounting records, and timesheets that establish where the money went. Next slide, please. For payroll records, we're really talking about something that serves as proof that payment was made so that money went out the door. They need to be official records from payroll processing. So that can look different depending on what software you're looking at, but it can't be like a note on a napkin. You're looking for something that a system produces. It can include documents like payroll registered and like copies of canceled checks or paycheck copies. And it should include cost amounts for each employee on salaries, wages, and any benefits subject to reimbursement. So you should be able to look at an employee's payroll record for a given period and see everything that went out the door for that employee, including what's being assessed to the ESG program. Next slide, please. In terms of accounting records, we're talking about something that includes a copy of the general ledger for the appropriate time period. Again, you're going to be very familiar with like the general ledger from QuickBooks if you're in the invoice processing business, and that's kind of what we're talking about. We're looking for something that shows transactions that were performed for the purposes of allocating salaries and benefits between projects. So some way of determining at a systems level how expenses were divvied up among various funding sources. That demonstrates the separation of expense tracking. Again, we're looking for something that says we've divvied expenses up between XYZ, and it needs to be able to be tied back to the salary and benefits allocations on timesheets. And what that ultimately means is that the accounting records should at a systems level allow you to tie timesheets that say this many hours equals this amount of money, and that amount of money should tie up somewhere to something that the system is producing as a whole. Next slide, please. As far as timesheets, we're looking for something that documents the percentage of time spent on each project during the pay period. It could be by percentage, more likely it's by hour, and then or by portion of hour, and that's kind of translating into percentage. Timesheets need to be signed by the employee and by somebody with supervisory authority or who can sign off. So that would be employee plus supervisor, or employee plus relevant payroll person, or employee plus executive director, someone in their chain of supervisory authority. It needs to include the dates of the pay period and the dates of the signature, so signed and dated. It also needs to specify what pay period we're talking about, and the signatures on there cannot be before the end of the pay period. It can't happen before the pay period. It can't happen during the pay period. It needs to take cognition of something that happened in the past and say, yes, this happened. Next slide, please.
I'm sorry, I want to throw in one detail that I picked up on after I did this presentation. The one exception to the date thing is if the last day of the pay period happens to be some sort of paid holiday or the employee is on leave, because therefore they are utilizing a benefit on the last day. So we're talking about actual work days. So that is the one exception. If it was signed on Thursday because Friday was a paid holiday, that's fine.
Yep, and that's a really good point. The nuance that I would highlight there is that the signature attests that work was performed or that some alternative compensation was used in lieu of work. You can't certify that work was performed until it was performed, but you can absolutely pre-project like, yeah, I'm taking Friday off, or Friday is a holiday. It's Christmas, everybody's off, right? So next slide, please. Other applicable records, it is possible for agency to pay benefits directly through like a third-party benefits provider rather than through the payroll process. That's especially common for, I've seen it especially in very small agencies that don't have the internal capacity, or very large agencies that recognize benefits from scaling up. If benefits are paid via direct billing rather than through payroll, the documentation you'd be looking for is an itemized invoice from the provider, a generalized record showing the cost for each employee, and then proof of payments, again, like a check copy. That's a little more unusual, but you do see it from time to time. Next slide, please.
All right, I think this one's me.
Oh, you. I love this. I love this clip art. We keep using it, so it's so clearly dollars under the table. I love it. Reimbursement under the table with unmarked bills.
It was the only picture of actual money I could
I
find.
remember it's the only one in there. I love it.
So, and Tuesday, I see your question in the chat. That might be one for us to discuss at the end, because there's a lot of variation in what records can look like. So I'm going to save that for the end, but wanted to let you know that I saw it. So the reimbursement process. In the reimbursement process, the subrecipient collects required documents, verifies documents for accuracy and completeness, and compiles documents in a format prescribed by HCD. So what I'm thinking about here, and there certainly could be variation that I'm not aware of. So if I'm stepping on something in your process, I apologize. That is not what I'm trying to do. My understanding of it would be, though, that like the local sub-subrecipients would be performing the work, and then the subrecipient would be collecting what they need from them in this context, based on what I just said. And then that comes to you, HCD, and then you would check that documentation against funds requested for compliance, and then follow up with the subrecipient if you need additional information. So if stuff isn't lining up, you go back to them and ask for what you need, and then ultimately disperse funds once you approve the cost. So that's the general process. And then in terms of documentation for salaries and benefits, this is what equals getting your reimbursement when you're the one waiting to get paid. You must have provided accurate payroll records, compliant timesheets, consistent accounting records, so accounting records that tie back to all of that appropriately, and then any other records that you might ask for as part of the process, because again, you do have the right to go back and ask them for more records. But if all of those things are successfully done, and I know that's easier said than done, it should equal reimbursement for the agencies. I see
Mark,
you.
I've got a question.
Yes.
Yeah, I've got a question. So if I'm HCD and I know that this is the formula to reimbursement, but one of these items is missing, what's my best approach? What should I do next?
My first approach when something was missing was always to go back to whoever provided me the documents and just say, hey, this is our policy. We need these specific things. I'm not seeing this here. Can you get this for me? 9 out of 10 times, they would just say, oh, I'm sorry, I forgot to drop that in, and they would give it to me. If they are unable to produce it, then you get into, a deeper wormhole. But that's how I typically handled it.
Yep, I think you're exactly right. I have seen it done both ways. I've seen it done humanistically, like Mike says, where you just like ask the person for the thing. Or I've seen it be a big delay and a whole, like, return the full reimbursement request and say you have to fix, and that second process really delays money getting out the door, which nobody wants at this point, or really ever. So I agree.
Yeah, and from another personal experience standpoint, I'll just say when I was on the nonprofit side, I worked with localities that did what Gordon just said. They would make it a big deal if you were missing one thing. For some of them, it would take me literally almost a week of full-time work to put together a stack of paper to get a $2,000 reimbursement. And we ultimately stopped taking money from those localities because the effort we had to put in to get the reimbursement was not worth the amount of money they were providing us. And we did an actual analysis on that. How many staff hours were we using to get the reimbursements back in the door? And it wasn't worth the time. So, it's just, that is why I advocate for the human-centered approach. Just ask them for what you need. And if they can't produce it, then maybe you start getting a little more prescriptive. That's my approach. So here are some red flags when you're asking for documents. If the timesheet entries do not change between pay periods, so if you're getting the same timesheet for the same person with the exact same time allocation every time, that's a red flag. either they are using budget estimates and they are doing it incorrectly because they're not adjusting the timesheet, or they're just being lazy and sending you the same timesheet and hoping you won't catch it. So, that's a big red flag. That's something you should dig into a little deeper. If the timesheets don't contain the date, certification from the employee, and certification from the supervisor, that's a compliance issue. That's a big red flag. If the timesheet dates indicate that it was approved before it should have been, like we talked about earlier. If the accounting allocations do not match the timesheet entries. So if you're getting that general ledger and you see the percentage of salary that was charged to the ESG program, the timesheet needs to support that. So if you do a spot check and compare the timesheet to the payroll record to the accounting record and they don't match, clear red flag. And that kind of what I just said, if the payroll records don't align. So all three of those things have to align. So basically, if you can take the paycheck, you can multiply what's on the paycheck by the percentage that you see from the timesheet, that should match up with the accounting record. That's kind of the process. See, you popped off there, Gordon.
Yeah, if I may just include a sort of orange flag, that just tying this back to a comment that I made earlier. If you're getting timesheets with a lot of hours or consistent hours or really any hours from somebody whose job title includes something like executive, chief, director, like corporate level titles, it's not necessarily a problem, but it is something you want to look at more closely, as while there are exceptions, people with those titles are often too far removed from direct project delivery to have salaries that are charged to any of the components, even often admin. So something to look for.
Yeah, I agree with that. And I worked at a nonprofit that did that. I will never say who it was. So reimbursement versus monitoring, just touching a little deeper on something we've talked about already. HCD will need to create policies that dictate what level of review is done via reimbursement versus monitoring. So some key questions around that are: what documents will be collected with reimbursement requests? Will document collection be risk-based or standardized across all grantees? So, you could ask for the same thing from everyone, no matter what, or you could have higher risk grantees that you ask for a little more when they submit reimbursements versus others. And, that will be based on your monitoring process and determining who's high risk and who's not. Will specific issues with reimbursement trigger monitoring? So if an agency submits a reimbursement and you can't tie anything in that reimbursement back to anything in the contract, or the documentation never lines up, how is that going to trigger an in-depth monitoring? Will that trigger an in-depth monitoring? And then how will we balance risk with the burden of collecting and reviewing documents for reimbursement? Again, like we touched on before, collecting documents with reimbursement and going through them is time consuming, and it's a big lift. So how do you want to balance risk with that effort? Because at some point, you do have to make decisions on which things to dig into more and which things to dig into less. So that's kind of what we're talking about here. That is the last thing. So I'm going to turn it back over to Gordon to walk us through resources and then get us into question and answer.
All right, sounds good. And I do see we've got a little backlog of questions, so I will take us into those. But resources in front of you. These are three pieces that we highlighted throughout the process. Obviously, the ESG interim rule is the foundational document of the work that we're doing here. The uniform administrative requirements, or 2 CFR 200, are where we're looking for our cost principles. And finally, there is the FAQ that we looked at around employee compensation, overhead eligibility and allocation. It's useful to reference. And I think that takes us into our Q&A for the day. All right. So I'm going to go ahead and grab Connie's question down there.
Yeah, and I'm going to take down the presentation here too, so we can see each other.
Human faces. So I'm going to go ahead and take that. So Connie's question in the chat, for those of you who might not be able to see it, is that y'all recently received an expense for a, quote, program director who was salaried. The subrecipient said that they didn't have a timesheet. Connie says that y'all think you need to see if this program director works 100% ESG. Any advice? I think it's a great question. Of course, Mike and I could provide a comprehensive answer, but y'all just listen to the presentation. So I would invite y'all. So what would kind of anybody? What would your first step be in taking action on this?
Hey, Gordon. Well,
okay. Go ahead, Gio. Go ahead.
yeah, it was mine that I received. This was actually mine. So to kind of provide a little more context, the grantee pretty much said their payroll system does not show that level of detail because of the salaried exempt status. They don't have separate timesheets, but they did ask if this is something that we need to begin implementing, let us know. So I would just like to know if we need to circle back, but they did disclose, later on that this person is their family center director and they are the primary staff responsible for ESG activities. So again, it goes back, I understand it's partially sufficient, but it also goes back to what Michael was saying earlier. How much time do we want to investigate? I understand keeping track of time, that's very important. But at this point, I'd like to know what would be the best course of action from this point forward.
Sure. Well, this is a good one to chase down, right? If you're talking about an entire staff person's salary that is charged on a recurring basis, yeah, spend the time on that one. Do you prefer Giovanni or Gio?
Sure, it's fine.
Okay. So, we'll answer your question, no problem, but what do you feel like would be the first step? Or what is the first thing that you want to do in response to this?
I'm not really sure. I mean, I feel like it's partially a sufficient answer, but at the same time, it's not, because I understand, well, we don't know if they worked on ESG activities. And I do agree that keeping track of things is very important because we should not be paying for things that are not ESG related.
Sure. Sure. Well, fair, and that's fair enough. And you're learning, so no problem there. Thanks for letting me pick on you a little bit. I think that there are several red flags there. One of them is there's a director level staff person who's charging all of their time to ESG. It's entirely possible, right? Director level staff could very well be providing, they could really be a program manager, especially at a smaller agency. So that's entirely possible, but you need to see whether it is or not. And we can't produce timesheets thing, no. It's entirely possible that that's not how they're thinking about it. But what you need to get into ultimately is there somewhere in their accounting system where they are keeping a record that's signed off by the staff person and by their supervisor of how their hours are divided up by funding source? And if there is, they can call it a timesheet. They can call it an elephant. As long as you can email it or fax it, it's fine. But if they're not systematically on an ongoing basis divvying up the staff person's time by funding source and then within ESG by program component, then you've got a problem. And that is something that they're going to need to correct going forward, whether that's they need to look at, their entire accounting process, or whether they need to implement something specifically for ESG. That's going to depend on how large the agency is and so on and so on. But yeah, I would absolutely not approve that expense going forward until I had some backup. And Mike, I can see you're itching to get in there.
Just one clarification I'll throw in is under the old circulars, and I have not seen anything that contradicts this in the uniform guidance. If a person has an employment contract or some other documentation that explicitly says they will work on ESG, rapid rehousing, always, never touch anything else, that can serve as documentation if they are 100% for that thing. So you can get by without having a timesheet in that instance. But I do think that if this agency has other people that touch multiple projects, or if they have multiple ESG components that are funded, Gordon is absolutely right. It's a problem if their accounting system can't track that.
So if I may, I believe it was a county. Giovanni, was a county, wasn't it?
It was a nonprofit.
It was a nonprofit. Okay.
Homeward bound. Yeah.
Homeward bound. Okay. Okay. I think, and maybe it's a matter of because we're just saying timesheet. Everybody calls them something different. So we're trying to still figure out the appropriate way to request these. And then I wanted to say that we are working towards some kind of standardizing form for these employee wages, taxes, benefits, because it is a struggle. And that's something Tuesday has started working on. And I hear what you're saying, that, that could be problematic, but I think it might help overcome some of this, where we're getting all kinds, and sometimes they dump 300 pages on us, or we have to go back and forth. So we're trying to go towards some kind of, and we actually got them, I think Tuesday. Then we get the calculate from ICF, didn't we? Yeah.
Sure. I ultimately, I stand by what I said earlier, right? Which is, if you're thinking about standardizing, there's some things that are very easy to standardize, right? So if you want them to articulate their payroll, whatever their payroll backup documentation is, if you wanted them to articulate it in a certain way to you, in a standardized way, like, in addition to your payroll records, we want a one-pager that says these staff, these hours, these components, in addition to the rest of it, just so we know what we're sorting through. And then, like, tell us in a notes column that says this ties back to this employee ID number or staff name or whatever. Like, that's very reasonable, and not a big other burden. But I would really go carefully with implementing anything that requires folks to change more than that, just because it can be expensive if they've got an existing system. It can be really disruptive to their process. It's asking them to do maybe more, maybe a lot more with no additional funding, which is always a hard ask. And so, whether or not you choose to go ahead with that, I would really advise, whatever you're thinking about rolling out, run it by your subrecipients first, way before you do it, and have a public comment period. Get their input on what you're going to push out there, request feedback. They might come back with really good ideas. They might come back with nothing. And in either case, then you've got a document that people have either had input into and have had that input heard, which is good for relationship building, or they gave no input, at which point you can say, you had your chance to have your say, right? So that would be my suggestion, is whatever you do, just go slowly, go slowly.
I think what we're doing is we're looking at making a suggestion. These are the things that we're suggesting you have available to us, or available and on your thought process when you're doing payroll. And we may request those when we're doing monitoring, whether it's our main monitoring or whether it's for our bigger monitoring. And it's just an idea of giving them that these are the things we might be looking for. So that's our goal. But I like your idea of sending it past our subs before we implement anything.
Yeah. Always good to go slow and careful as a general rule. I know that we're coming up on time, but we had a question from Tuesday regarding having trouble getting records showing program ties. Mike, you want to get your teeth into that one before we all turn into a pumpkin?
Yeah, and I'll probably go a minute over. I apologize. But it's difficult because the documentation can look different. It depends on what system they use to track time. That there's a lot of variables. So all of that said, though, they should be able to produce something. So if you're having trouble getting something that shows program ties, that's a red flag with how they're tracking the time at the agency level. They should be able to give you something. So if you create a form that's, that they're going to report time to you on, like we were just talking about, then that form should separate it out by program, or at least separate it out so you can see where ESG is clearly separate from everything else. So that's one way you could do it. It's hard to say how you could give individual guidance because things are so different depending on what they use. But like if they're using an electronic system, for instance, it has to be a system that can break things out by program. If it can't, then they probably need a better system because it's a federal requirement. So all of that is to say, I don't know that I have a single great answer for you, but the fact that you're having trouble with it, I think is something to dig into with the ones that you're having all that trouble with, and just figure out why they can't produce it. Is it because they're not keeping the records, or is it because their system makes it difficult to pull it in a way that's like easy to read? Like, why is it that they can't show you program ties? Because if they just absolutely aren't tracking it, obviously that's a huge deal. But if they are tracking it and they're just having trouble with their system or something like that, you know, that's something that's a little easier to fix. Sorry, I know that's not a great answer, but it's the best I've got.
Yeah, unfortunately with invoicing, it does often come down to making a decision about how deep you're going to dig and, you know, how much you're going to force people to get compliant with federal regs. And they might not like that particularly much, but it's a whole lot better than recapture.
Yeah.
At the end of the day.
All right. Well, it looks like we are at time. So we'll say thank you for joining us today. We appreciate it as always. If you have questions in between, certainly send them to us, and we'll get to them as we can in our troubleshooting session.
I didn't see, are we covering this in more depth next week, or are we doing something different?
Next week is indeed a clinic on this subject,
Okay.
so you can look forward to
Excellent.
our usual Q&A, take a bat to it format.
Okay,
Yep.
excellent. That's good. We need it.
Thank you very much. Very informative.
Thank
Thanks
you
so
all.
much.
Glad to hear it.